Welcome to the Deck Dive. Today we're diving into Transformers and Rectifiers India Limited, often known as TERL.
Right. And unless you're directly involved in, say, power generation or heavy industry, they might not be a household name. They're based in Ahmedabad, very much a B2B player.
Exactly. But we know there's interest in understanding their financials, their recent performance, and what they're planning next. So we've gone through their latest earnings call, their investor
They
presentation.
pull out the key stuff.
Precisely. And when you look at the sheer amount of raw material they process, it really hits home how big their operation is.
It does. It underscores why their financial health and, having a clear strategy is just so vital. Scale like that needs careful management.
So that's our mission for this deep dive. Get the core insights on Terrell's Q4 and full FY25 performance, figure out their growth plans, and look at these emerging areas they're getting into.
Okay, where should we start? The overall performance, maybe?
Yeah, let's start there. The big picture for FY25.
Right. Well, FY25 was honestly a massive year for them. They called it a landmark year. And looking at the results, you can see why. Record operations, tech advancements, strategic moves, it was all happening.
And that record production figure, 29,118 MVA, that's megavolt amperes, basically a measure of transformer capacity.
Yeah, it tells you the sheer power output they're dealing with.
And compare that to the previous year, FY24, which was 16,425 MVA. It's a huge leap.
A really significant jump. And that directly fueled, as you'd expect, record revenue growth. It wasn't just production either. The demand side was strong.
Okay, so the orders were coming in.
Absolutely. Record order inflow for the year, 4,504 crores. That left them with an unexecuted order book of 5,132 crores at the end of March 2025.
So that gives pretty good visibility, right, for what's coming down the pipe?
Yeah, it suggests, revenue visibility for maybe the next 15, 18 months. It's a solid backlog.
And they highlighted one specific order, didn't they? The GTCO one.
They did. That was in March 2025, 740 crores, their single largest order ever. GTKO is Gujarat Energy Transmission Corporation.
A major state utility. So landing that kind of contract really says something about their standing.
Definitely underscores their leadership position, yeah, and trust from major clients.
Something else that happened strategically was the QIP.
Yes, the Qualified Institutional Placement. They raised 500 crores.
Which is a way companies raise capital from big investors, right?
Exactly, and they did it quickly. The stated purpose is clear: funding backward integration and expanding capacity. Key parts of their strategy.
Okay, let's maybe drill down into Q4 FY25 specifically. What were the highlights there?
Well, on the technical side, they successfully completed dynamic short-circuit testing on a big one, a 500 MVA 400 kV transformer. kV is kilovolts, the voltage rating.
So that's a crucial test for reliability under stress.
Extremely crucial for these high-power units. Shows their engineering capabilities progressing. They also did similar testing on an 8.8 MVA inverted-duty transformer.
And that met new specs.
Yeah, the latest specs from the Central Electricity Authority, the CEA. So, keeping up with standards.
What about internal stuff, infrastructure?
They mentioned progress on a fully automated radiator facility. Radiators are key for cooling transformers. And they started the approval process for that with Power Grid, PGCIL.
Automation usually means efficiency gains, better quality control.
Potentially, yes. They also hit a record for the number of transformers tested back in December 2024, both total MVA and just the sheer number of units. Shows their testing setup can handle volume.
And there was a tech tie-up mentioned in Q4.
Right, another move aimed at accelerating that backward integration, building up in-house capabilities, making the supply chain more robust.
Which leads nicely into the CRGO acquisition. That seems like a really big deal.
It really is. They bought a 100% stake in a CRGO processing unit. CRGO is cold-rolled grain-oriented steel.
And that's a major cost component for transformers.
Huge, around 30–35% of the cost. So achieving full backward integration here gives them massive control over quality, supply, and potentially cost. It's a very strategic acquisition.
Okay, so that covers some key Q4 moves. Let's zoom back out to the full year financials. Consolidated first.
Sure. Consolidated revenue from operations hit 2,019.38 crores. That's up 56% year-on-year from about 12,295 crores.
Wow, 56% growth. That's strong. What about earnings?
Ebitda, even stronger growth there. Ebitda earnings before interest, taxes, depreciation, amortization reached 359.14 crores. That's a 157% jump from FY24's 040 crores.
157%. And the margin?
Ebitda margin expanded nicely too, went up to 17.51% from 10.76% the year before. So not just growing revenue, but growing more profitably.
And the bottom line, profit after tax, Pete.
That was also quite dramatic, 216.58 crores, compared to just 47.43 crores in FY24.
So like a 357% increase year over year.
Exactly. Huge improvement in net profit.
And the standalone numbers, just looking at the parent company, were they similar?
Very similar story, yes. Standalone revenue was 1,950 crores, up 53%. Standalone EBITDA was 320 crores, up 149%, with the margin improving to 16.12%.
Standalone PP.
187.72 crores. Again, a massive jump. 352% from the previous year's 41.5 crores.
So whichever way you slice it, FY25 was about significant growth, top line and bottom line.
Undeniably. And it wasn't just the P&L. Key financial metrics also improved significantly.
Like ROCE, return on capital employed.
Right. That jumped to 22.76%. It was only 6.7% the year before.
Yeah.
This is much better efficiency in using capital.
And ROI, return on investment.
Similar story, up to 23.13% from less than 1% previously. These point to real improvements in profitability and operational effectiveness.
And perhaps most significantly for financial health, the debt situation.
Big improvement there. The debt-to-equity ratio plummeted. It went from 0.84 down to just 0.02.
0.02, that's practically nothing.
Very low. They're well on their way to being net debt-free. Plus, the improved working capital management debtor days came down significantly, from 156 to 114 days, getting paid faster.
Okay, so a really strong financial performance in FY25. How do they plan to keep this momentum going into FY26 and beyond?
Well, the immediate focus for FY26 seems to be on sort of consolidating these gains, continuing the push for global expansion, and maintaining that sustainable profitability.
But they also have that longer-term, pretty ambitious goal, right?
They do. They've reiterated this vision of becoming a USD 1 billion revenue company, and they're targeting that within the next 3 years.
$1 billion. That's a big target. How do they plan to get there?
They outlined a few key pillars. One is definitely scaling up that backward integration further. The target is 100% integration, specifically mentioning by Q1 of FY26-27.
They're putting money behind that.
Oh, yeah. They've earmarked 550 crores in CapEx over the next 15 months, largely for this. They're also investing heavily in automation and digital transformation across the board.
And focusing on specific product areas.
Yes, particularly clean and sustainable energy solutions. Things like ester oil-filled transformers, they're more eco-friendly. And transformers for solar, for hydro projects. They even mentioned potential applications for green hydrogen production, aligning with India's energy transition goals.
To deliver on that, they'll need more capacity.
Exactly. And they're expanding. A 15,000 MBA expansion started in April 2024. Phase 1 should be running by May 2025.
Okay, so quite soon.
And then there's a larger 22,000 MBA expansion for extra high-voltage EHV transformers at their Moriah site. That's expected to finish by February 2026.
So what will the total capacity look like after all this?
They're projecting it will exceed 75,000 MBA once everything is completed. A substantial increase.
And is the demand there to fill that capacity? You mentioned the order book earlier.
Right. They also highlighted a pipeline of inquiries, not firm orders yet, but inquiries worth over 22,000 crores, both domestic and international. So the potential demand looks robust.
And they expect margins to keep improving.
That's the focus. Continued margin expansion through efficiency gains, better product mix, and leveraging those improved return ratios we talked about.
And sticking to the debt-free goal.
Yes, aiming to be debt-free within the next year or two. That provides a lot of financial flexibility.
What about exports? They have a global presence, but are they prioritizing that?
It seems the focus strategically is more on the strong domestic opportunities right now. They mentioned better margins and payment terms in India. They plan to keep exports around, say, 15% of the order book, but India seems to be the primary engine for now.
Okay, let's shift gears a bit. What about these emerging areas and product innovations? Where are they pushing the envelope?
Well, they already have the capability for very high voltage stuff, up to 1,200 kV transformers. That puts them at the sort of top end of transmission tech.
And HVDC, high voltage direct current, that's a growing area.
It is. and they have plans to enter that segment. They mentioned being in talks for potential repair work on existing HVDC transformers first.
Kind of like getting a foot in the door.
Exactly. That could lead to manufacturing orders down the line as India builds out more HVDC infrastructure.
What about specialty transformers?
That market's growing too, especially rectifier transformers needed for green hydrogen and ammonia production. They're seeing global inquiries for those. Plus, they're already a major supplier for electric arc furnaces in the steel industry.
So their product range is pretty broad then.
Oh, definitely. Power transformers up to the highest voltages, furnace transformers, rectifier transformers, specialty ones for things like trains, also shunt and series reactors.
They mentioned a specific achievement with reactors, didn't they?
Yeah, the world's first 420 kV ester fluid-filled shunt reactor. They also do mobile substations, earthing transformers, and of course those tailored for solar and potential green hydrogen uses. It's a diverse portfolio.
And that backward integration, especially the CRGO unit, how does that tie into product quality and competitiveness?
Well, having control over that key raw material should directly improve the quality and consistency of the steel core. It also likely means better operational efficiency and shorter delivery times, all of which indirectly supports margins and makes them more competitive.
And their global footprint. You mentioned inquiries, but where do they operate?
They have a presence in over 25 countries, and they make a point of highlighting their adherence to international standards, AS, IEC, IEE. That's important for winning international business.
Okay, so let's try and pull this all together. For someone wanting to understand Terrell's recent performance and future path, what are the main takeaways?
I think, first, FY25 was clearly a year of very strong financial performance. Significant growth across the board, revenue, profit, orders. Hard to argue with those numbers.
Right? And second?
Second, they're making concrete strategic investments. Capacity expansion and backward integration aren't just talk. They're putting serious capital behind it to fuel growth and efficiency. Third, they seem well-placed to benefit from India's power infrastructure growth. And they're not just waiting, they're actively exploring these newer, potentially high-growth areas like HVDC and green hydrogen tech.
And finally, that focus on sustainability.
Yeah, the push towards sustainable and efficient products seems important. It aligns with where the whole energy sector is moving globally, which could open up more doors for them.
So this deep dive hopefully gives a clear picture based on what the company itself has been communicating lately.
Absolutely. It's based on their own reports and calls.
For anyone tracking companies in India's power infrastructure space, Terrell definitely presents quite a compelling story right now, given their trajectory and strategic moves.
It does, which maybe leads to a final thought to consider. They have this ambitious goal, USD 1 billion revenue in 3 years. The demand picture looks good.
But what are the potential roadblocks?
Exactly. What challenges might they face? Beyond just hitting financial targets, you have to think about things like, managing complex supply chains for other materials, not just CRGO. What about competitive pressures intensifying as the market grows? And just the sheer operational challenge of executing such a large expansion smoothly. Worth pondering those potential hurdles.